Get more analysis on the retail sector. Nick Geimer is director at Pick Solutions and is in the studio to give us more insights into current trends in the retail sector. Nick, thank you so much for your time.
Thanks for having me.
Well, if we look at the latest figures from the Reserve Bank when it comes to credit extension, PPI and CPI, we've seen some easing in all these spheres, but exactly what are we looking at in the current economic climate?
Well, today we've seen an easing. Now what that means for tomorrow or the next day or the next week is anyone's guess, and I certainly am glad that I don't get paid to forecast what happens over the coming days. It does seem to be a good sign, though. We all hope that inflation has peaked, and with that the promise for rate cuts as the currency continues to improve mean that that could happen in the next couple of months. No guarantees, but that's what we're hoping happens.
But looking forward, I mean, as an analyst in this sector, you've got a situation where the rand weakened sharply and has pulled back somewhat to regain some of that strength. So looking forward to 2009, I mean, are we going to see an easing in terms of how retailers are feeling when it comes to margins and all the things associated with trying to trade in this trend?
I think 2009 is going to be a tough period for retailers and banks, really anyone giving credit, and that really is the expertise of Pick Solutions and what we do at Pick Solutions. So I can't comment on the overall margins for retailers. However, just understanding what I do of the industry, it is going to be difficult. In credit terms, the profit margins that come from the credit extended to consumers will remain very difficult in 2009, both from the ability of retailers to grant new credit to new customers, to grant additional credit to existing customers, and from the continued upward pressure of bad debts.
But then, if you are sitting in this kind of situation, there is some ways to make money in this climate. I mean, what would you tell a retailer who's trying to ride out this wave?
For sure, the best defense is a good offense, as the old saying goes. And so while other retailers are turning off their lines of credit to consumers, the smart retailers are actually finding ways of optimizing, identifying good customers in their base and actually giving those consumers more credit. While the story in the headlines is pulling back on credit, the smart retailers are actually finding the good customers and giving more credit to them and at more attractive terms.
So that's a picture that's currently playing out in South Africa. But you know that the global economy as a whole is in a really tight credit squeeze. So how do you think retailers, both possibly in the UK or the US, are going to have to ride out this wave, because their fundamentals are slightly different to what's happening, not even slightly, are different to what's happening in the South African market?
A significant part of retailers' earnings worldwide are made from the amount of credit, from the margins that they get on the credit that they give to retail customers. And as such, even if the retailers see margin squeeze on their products, and certainly any imported products for 2009, they will continue to have margin pressure as the rand is depreciated. I think it's back to about 30% from where it started at the beginning of the year. But to offset that is the opportunity through good and scientific credit management to optimize who is getting more credit and being more aggressive about taking credit back from customers who are vulnerable to the pressures of higher interest rates and higher income being spent on credit.
Then looking at the issue of global trade, because SA's biggest trading partner was traditionally the European market. So then, if they are going through some sort of a recession, their credit markets are very tight, how is this going to impact us sitting down here at the tip of the African continent?
Well, fortunately, what's being traded between retailers in South Africa and retailers in the Northern Hemisphere isn't credit. While they trade the goods in terms of the buying, usually for resale here in South Africa, the credit is confined to the South African market, and very few retail customers, particularly in the lower LSM groups, very few of those customers have exposure to the global financial markets in the Northern Hemisphere.
And just quickly and finally, I'd like to find out from you, you've been at this game for 10 years, and you say that a situation like this has been unprecedented. So from your experience, do you think that in a few years' time there are going to be differences in the way that credit is offered and how people play, since the subprime crisis has changed the way people look and think about their businesses?
Well, it's interesting because that change was already underway before the credit crunch even came into play. In South Africa, for example, you see the way that some of the large retailers are considering splitting the credit providing arm of their business from the goods providing arm of their business. So some retailers are making that separation, others will continue to keep them together. Those changes were in play actually starting in 2006 when the National Credit Act was coming in, and everyone in the credit market, be that retailers, banks, or microfinance institutions, saw that the rules were going to change.
Well, Nick Geimer, Director, PIC Solutions, thank you so much for your time.
Thank you very much.
So that